Soumit Sarkar is standing by with all you need to know about Varroc and the IPO that is there. That starts today. Soumit.
So Varroc Engineering is looking to raise close to 1,950 crore rupees at a price band of 965 to 967, and at the upper end of the price band, that is 967, the company will be valued at close to 13,000 crore rupees. Now if you see, the offer is a complete offer for sale where the promoter and the Tata Sons investment arm, that is Omega and Tata Capital, will be selling their shares to the investors. Now the Tata Group companies are making nearly 6 times their investment in the company. Now on an average, their investment cost in the company was close to 162.43 rupees per share, and now they are selling their shares at 967 rupees. So that's nearly 6 times gain on their investment. Now if you see, Varroc Engineering is designs and manufactures exterior lighting, plastic and polymer components, and electronic and metallic components. Now mainly it is an exterior lighting business. Now if you see the revenue structure of the company, it gets nearly 60% of its revenue from the lighting business, while the remaining 40% comes from polymer, electrical and metallic components. And if you see, the company has nearly 36 manufacturing facilities, of which 26 are present in India, while the remaining 10 in 6 different countries. Now the capacity utilization of these 10 plants in the foreign countries is close to 80%, while that of the 26 Indian plants is close to 70% for the financial year 2018. Now if you see, the company generates nearly 65% of its revenue from the global markets like Europe, North America, and some of it comes from the Asia Pacific region, while the remaining 35% comes from India. Now in the Indian market, they serve mainly to the 2-wheeler and the 3-wheeler auto manufacturers. Now Bajaj Auto is the major client, as it contributes nearly 19% to the top line of the company, while the top 5 clients contribute nearly 60% to the revenue of the company for the financial year 2018.
Okay, and Soumit, a word on the financials. How do they stack up against peers, and any of the brokerages that have given a recommendation on this IPO?
Now if you see, for Varroc Engineering, they do not have an exact peer because of their diversified product portfolio and a significant exposure to the foreign market. But we have tried to compare it with Lumax Industries, Minda Industries, and Motherson Sumi. Now Lumax Industries is into the manufacturing lighting component, but it serves the domestic market. Minda Industries has a diversified product portfolio and is the nearest peer when compared to market capitalization, while Motherson Sumi is a big player with a diversified product portfolio but has a significant exposure to the foreign market. Now if you see the growth ratios on the financial side, the Varroc's growth ratios were better than that of Lumax and Motherson, but it lagged when compared to Minda Industries. Now if you see the revenue and EBITDA of the company, it grew at a compounded annual growth rate of 20% and 28% over FY13 to FY18. However, we do not have the growth rate of profit because in FY18 the company had made a loss, but from FY14 itself the company was profitable. On the balance sheet side, if you see, the company's total debt to equity is at par with its peers. It is as low as 0.3 times, while the book value per share is higher than Minda Industries and Motherson Sumi. For FY18, it's around 211 rupees per share. On the return ratio side, now the return ratios are a bit subdued when compared to peers, but when you compare it with financial year 2017, all the 3 return ratios have expanded. For FY18, Varroc's return on equity was 16%, return on capital employed was 14.6%, and return on asset was close to 7.1%. On the valuation side, the valuations are largely reasonable and balanced out when you compare it with its peers. For FY18, Varroc's price to earnings was 30 times, market cap to sales was 1.3 times, EV to EBITDA was 15.6 times, while price to book was 4.6 times. Lastly, on the brokerage side, now it's a mixed view, with 2 of them having a subscribe recommendation, while Angel Broking have a neutral recommendation on this IPO. Now these 2 have a subscribe recommendation on the back of reasonable valuation, decent return ratios and balance sheet, and the strong growth opportunities that Varroc has, while Angel Broking has a neutral rating because of a low top line and bottom line growth over FY16 to FY17 and its exposure to the 2-wheeler and the 3-wheeler market in India, which according to Angel Broking is in a slow growth phase.